Welcome back to our Explainer series. Look, if you're a successful entrepreneur or a high net worth individual, you are going to want to pay close attention because this one is absolutely for you. Today, we're tackling a massive high stakes issue that honestly just doesn't get the airtime it deserves, and that is wealth preservation. We're going to break down why keeping your wealth is a completely different game, and frankly, a much, much harder one than making it in the first place. This isn't about getting rich. This is about making sure that you and the generations coming after you actually stay that way. So let's just dive right into it. 10 lakh rupees a month. Once your monthly income crosses that 1 million rupee mark, a fundamental shift happens. You have officially entered a completely new tier of financial reality. And here's the catch. At this specific level of success, the traditional rules of the game, they completely break down. The exact strategies that got you here simply aren't going to keep you here. Because making money is actually no longer your primary problem. Your absolute biggest problem right now is keeping it.
To survive this shift, your entire mindset really has to change. Think about it. When you were first building your business, taking massive risks to make money was the ultimate goal, right? Mistakes were just part of the learning curve. Sure, they were expensive, but you had the time and the relentless energy to just bounce back. But now we are looking at the new problem, keeping it. At this elevated level of wealth, financial mistakes are no longer just a little expensive. They can be absolutely catastrophic. We're talking about wiping out decades of hard-fought progress in just a matter of months.
Which brings us right to the core issue, the wealth preservation problem. When you're managing truly substantial wealth, you aren't just looking for the next best mutual fund anymore. You're not just doom-scrolling financial news trying to find a hot stock pick. A single stock might give you a nice temporary bump, sure, but it does absolutely nothing to protect you from inflation or sudden liabilities or massive systemic economic shifts. If that transactional, stock-picking mindset is still your go-to approach, you are leaving yourself and your family incredibly vulnerable to forces totally outside of your control. It requires a complete paradigm shift. Traditional finance is all about picking stocks, finding a decent fund, and just kind of hoping for a good annualized return. But the reality of HNI wealth is entirely different. It's about managing an ecosystem. You have to transition from being a simple investor to becoming the architect of a complete financial ecosystem. This means really understanding how tax law, estate planning, legal structures, and asset allocation all seamlessly interact with each other. It requires a completely different set of tools and, honestly, a totally different perspective on what money actually is. But here is the genuinely terrifying reality. Despite all their brilliant business acumen, so many high-earning entrepreneurs are operating right now with massive hidden vulnerabilities. So we're going to pivot for a second and look at these blind spots. These are the hidden traps that expose even the most aggressive, successful wealth creators to total ruin. We aren't talking about obvious mistakes here. We're talking about the silent killers of generational wealth. The first major blind spot is massive concentrated risk. Picture this, having 80% of your net worth tied up in your own business or a single asset class. Imagine building this incredibly successful tech company or a massive real estate portfolio for 20 years, only for a sudden regulatory shift or a localized economic downturn to completely wipe out its valuation overnight. You've essentially put all your eggs and your family's entire future into one single basket. If that one sector takes a hit, 80% of your life's work is suddenly on the line. And the crazy thing is, that concentrated risk is really just the beginning of a compounding series of errors. Once you're deeply entrenched in running that primary business, you slam right into the next massive issue, idle capital. Because you are so exhaustingly busy running your empire day to day, you simply don't have the time to allocate surplus funds structurally. So what happens? Crores of rupees just sit quietly in low-yield accounts, bleeding purchasing power to inflation, doing absolutely nothing for you. Then add tax inefficiencies to the mix. Without proactive, forward-thinking planning, you're losing massive chunks of your hard-earned doings to completely avoidable tax structures. You're basically tipping the government with money that should be securing your legacy. And finally, that brings us to the most dangerous blind spot of the whole shebang. The most dangerous blind spot of all is zero family governance. That means operating with no clear trust structures, no estate planning, and absolutely no formal wealth transfer strategy in place. It means that this massive legacy you've aggressively built over decades has zero structural protection against external claims, internal family disputes, or probate courts. You've built an unbelievable fortress of wealth, but you've literally left the front door wide open for anyone to just walk right through. Which brings us to the absolute most severe reality check of this entire explainer. We call it the one event danger.
This is where we really see the extreme fragility of an unprotected financial empire. I want you to really think about this for a second. What happens if one unexpected event strikes today? What happens if there's a sudden, unmanaged health crisis that completely incapacitates you? What if a major, unforeseen legal issue just arises out of nowhere? Or what if there's a sudden, really bitter dispute with a key business partner? If you do not have that broader ecosystem, that family governance, and that structural protection securely in place, what actually happens next? Well, here is the stark answer. At this scale, it takes exactly one unexpected event to completely destroy decades of aggressive wealth creation. Just one. All those years of late nights, the massive risks you took, the missed family dinners, all that entrepreneurial grit, it can all be wiped out in an absolute instant if a single crisis hits an unmanaged ecosystem.
Okay, take a breath. It definitely doesn't have to be this way. Let's shift our focus away from these urgent vulnerabilities and talk about how we actually solve this. It's time to move away from the anxiety and talk about structural empowerment and high-level solution building. Let's talk about building the architecture, because the simple truth is this: the bigger the wealth, the stronger and more resilient the architecture required to support it.
You see, true HNIs do not waste their precious time and resources trying to chase a marginal 1% beat on the stock market. That is traditional finance thinking, and frankly, it's a huge distraction. Instead, they focus their resources on building an ironclad structural framework. If your wealth is growing exponentially but your framework hasn't evolved past basic investing in simple savings accounts, you are heavily exposed to the elements.
So, what does this ironclad framework actually do for you? Well, a proper architecture performs 4 incredibly powerful functions. First off, it completely protects the core of your wealth from those one-event dangers we just talked about. Second, it optimizes your global tax footprint so you aren't just bleeding capital to inefficiencies. Third, and this is absolutely crucial, it guarantees and ensures liquidity precisely when crises strike. Just imagine facing a massive business disruption, but knowing for a fact you have immediate, structured access to cash without having to sell off your core assets at a total loss. You are literally never left scrambling. And finally, it ensures a seamless intergenerational transfer of wealth. No chaos, no legal confusion, just a cleanly protected legacy handed down exactly as you intended. The concepts we're diving into today are totally central to the Wealth Architecture Framework, which was developed by Wealth Director and Financial Architect Ravi Prakash. This framework basically serves as the essential blueprint for evolving a financial legacy way beyond the basics of everyday investing. It's a highly comprehensive, structured system that outlines exactly what is required to design and, more importantly, maintain true, lasting financial freedom for high-net-worth individuals. It ensures the whole ecosystem remains perfectly balanced and totally secure.
To wrap things up, I want to leave you with this incredibly powerful thought that just perfectly summarizes everything we've unpacked in this explainer today. Making money requires courage. Preserving money requires architecture. You know, you've already proven you have the courage, the grit, and the vision to build incredible wealth. You've already won that first game. The only question now is, have you built the architecture to protect it for the long haul? Thank you so much for joining me for this explainer, and I highly encourage you to take a really hard look at your own ecosystem and start securing your wealth architecture today.